Guys, welcome back to a new video. Today we're going to take a look at Usdjpy from a technical, fundamental, as well as an order flow perspective. If you're new to the channel, a sub would be appreciated, as I do provide valuable educational content on a daily basis. And before we continue, I just wanted to say thank you to everyone for the continued support on the channel. I really appreciate it because we are growing, and the bigger we grow, the more people I'm able to educate in the future as well. Now let's just jump straight into it, ladies and gentlemen. So starting here on the monthly time frame, what do we have? Now from a monthly perspective, we can clearly see how this level over here acted as a strong level of resistance. Market broke above that, came to test it as a level of support, giving us an indication that there is a good opportunity to look for a buying. The market printed this impulse and that correction, and if you want to take your Fibonacci there from the high to the low of the impulse, we can see how the market tested and rejected the 0.382. Now when the market hits in, rejects the 0.382, it gives us an indication that the upward momentum is quite strong. So we can set our Fibonacci, or we can set our take profit at the minus 27 of the Fibonacci extension. Now, to use it as a target level. Now from a weekly perspective, what do we have? From a weekly time frame, we can clearly see how the market had a couple of weeks back had printed this strong level of resistance, came back to test it as support. Support did not hold. The market then came back to break above that, came to retest that resistance that got broken, which is now turned support. So from here we can definitely expect that move to the upside there as well. Now if you drop down on the daily time frame, what do we see? Now from a daily perspective, give me a second. So here on the daily time frame, we can clearly firstly see how the market had printed this W formation. After a W formation, you expect to pull back to the neckline before the continuation to the upside as well. The only problem is we cannot be looking for any buying opportunities from where we are now. So the best way for us to approach the situation is that firstly we can see how the market had printed this level of resistance, broken it, tested it as support, as resistance again. That level is resistance. So what do we need to wait for? We need to wait for the market to break above this level of resistance. Then on the retest, that resistance would then be turned support, and then we can start looking for some nice buying opportunities on here as well. Now if you go and have a look at the order flow data, so the commitment of traders, and this tells us what the big banks and the hedge funds are doing in the market as well. Now we can see a base of the last report for the Japanese yen, how hedge funds came in and they closed 1,356 of their selling positions, and they also came in and they closed minus 8,989 selling positions. But we can see over here how the overall net positions had increased from 53,523 to 60,640, giving us an indication that we can definitely expect the Japanese yen to get weaker in the short term. Now if we go and look at the sentiment data, so this tells us what the retail traders are doing in the market. Now we can see how 75% of retail traders are selling the market, and we can clearly see why they are selling it, because the market had just reached a level of resistance, and if you're a price action trader, you'd probably do the same thing there as well. And we can also see how 25% of retail traders are buying, which is probably not going too good for them. Now like I always said, you always want to be on the opposite side of what retail traders are doing, because the retail traders are being used for liquidity in order to move the market at the end of the day as well. Now if we go and look at what fundamental data we have over here. Now this article from CNBC reads that Japan is stuck in a loop of money printing to boost economic growth, says an analyst. So this guy came out, he says the Bank of Japan decisions are off its hands and the country is stuck with money printing to grow the economy. So at the moment, the only thing that Japan is currently doing is they are just printing money and money and money, and they are not looking to hike interest rates, things that can actually help boost the economy as well. So the next thing we're going to do is we're going to just go over this article again. It says here that the payroll, which was the last fundamental data, so surprisingly we had the 467,000 jobs that was created despite the Omicron surge, but that is not the case, because this is for the short term. Now if there's one thing that we need to keep in mind is that we've got the CPI and the core CPI data coming out as well. Now for those of you that might not be familiar between what the difference is between the CPI and the core CPI, so the CPI first of all for all the CPI over here firstly of all urban consumers, all items less food and energy is an aggregate and price paid by urban consumers, okay, for typical baskets of goods. So this basically just tells us what the consumer spendings are, so what people are currently paying for uh, like what their current spending habits are basically. And then the core CPI on the other hand, it's basically so the economist basically just use this for food and energy, but it is separated from the CPI because why? The core CPI is a lot more volatile than the CPI on the other side there as well. Now, if you are thinking like how the CPI might impact the economy, I've explained that in a previous video, but if you're new here, then I'll just give you an indication. So the consumer price index is an index that is often used to measure inflation by tracking the changes over time in prices paid by consumers for a basket of goods and services. As such, the CPI is an economic indicator frequently used for identifying periods of inflation or deflation in the US. So higher CPI numbers means that the cost of living is increasing, and as a result of that, that is seen as as the market approaching inflation. Now we can see here that the previous was quite high at 0.5. The market is expecting it slightly lower, and they'll probably get that because for some reason the dollar seems to be doing good. But if the CPI comes out higher than expected, then that's going to affect the dollar negatively for both of those. Now, the other thing that I did want to speak about as well was the US national debt. Now we can see over here that the US national debt has just hit 30 trillion. Now, if you don't know how much 30 trillion is, that is quite a lot of money. And we can see here that the last time I spoke about this, this amount was sitting at 29 trillion. Now, the problem with the US national debt is, and I'll tell you what are some of the consequences. So that basically a higher debt, it gives lower national savings and income. It also means higher interest payments, leading to large tax hikes and spending cuts, decrease the ability to respond to problems. Also, it's a greater risk of a fiscal crisis. And if you don't know what the fiscal crisis is, that's basically a budget crisis. What that means is if anything had to happen within the United States, they would not be able to accommodate that budget for it because of the debt that is so sky high. The next thing is I want to bring up a quick video over here where Powell got asked about this. So Powell was asked about this debt that's sitting at that sky, and one thing that I want you guys to take away from this is just focusing on how Powell was quite skeptical, or Powell was not being able to answer these questions directly as well. But you be the judge, and you can quickly have a listen to this.
Point in your judgment, are we going to hit the point where you have to say, no, that's it. We can't do anymore. It's hurting the world. It's hurting our country.
So we don't know when that is, and as the world's reserve currency, demand for our paper is very strong. If you had shown that and then asked somebody 15 years ago to predict what interest rates would be, they wouldn't be predicting that the 10-year would be at 175.
No.
Right. So there's been a lot of demand.
But they would have predicted that the debt was going to go up.
They would have looked at that picture and said, well, you must be experiencing difficulty borrowing, but we're not at all. So. No, we're on an unsustainable path. Debt is not at an unsustainable level, but the path is unsustainable, meaning it's growing faster than the economy, meaningfully faster than the economy. We have to address that over time. We will address it over time. And the better way to do it is soon, and to do it in good times. Start when the economy is strong and the taxes are rolling in. And that's since we don't do fiscal policy, but I will say that the sustainability of the debt is.
Okay, so that was just a short video, just to give you guys an indication. Clearly there, Mr. Powell was not giving, the kind of straight answers that it is that we are looking for. But one thing that I did pick up over the times, that Powell was normally asked about, things about, how the economy is doing, and in terms of the growth process and all of that stuff. There's always been an answer for all of that stuff, but like I said before, you can't always keep hiding, and this bubble of them that they're printing, this bubble is getting larger and larger and larger and larger and larger, and at the end of the day, it is eventually going to burst in the long term. So we can definitely expect some weakness in the dollar index to come as inflation rises. But the best thing to look out for this week, guys, would be the CPI as well as the core CPI, because that will be key indicators to give you an indication of where the dollar might be heading next. Now that is all from my side. Hope you guys enjoyed the video, and as always, cheers for ears.